It's 4,000 factory-built homes that they're focusing on. So modular homes for $13 billion. So this actually works out to $3.25 million per unit or per home.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello, and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson. I'm joined, as always, by David Warren. We are both Level 2 mortgage agents. David is also the owner at Referral Mortgages, and we're very happy to be here. Thank you for listening. Quick shout out to our amazing sponsors, Gerté Poirier Avocat Lawyers, Big Insurance in Westboro, and CENTUM. And David, we got a very exciting new sponsor, which we're going to be announcing next week. So stay tuned.
We do.
Going to be some exciting giveaways for our listeners. But Dave, we got lots to talk about. Big week. Basically, when this comes out, Bank of Canada will very likely have already made cuts. The feds in the U.S. are likely cutting as well. I think there's like a 100% chance of a 0.25%. And we got another thing. We got the August stats. Okay. We got new build plans for homes in Canada. Lots to discuss. Where do we start? How are you doing?
Well, first realizing I am completely bloodshot because I'm so congested right now. So my if I look a little ridiculous, that's the reason why. But other than that, doing great.
Nice.
Can't breathe, but I'm all right. Today is Tuesday the 16th, and inflationary data just came out, which is going to be, kind of what we're waiting on after last week's employment numbers came out, which were dreadful. But we were obviously waiting for the inflationary numbers to come out just to see whether they were kind of in lockstep with how the rest of the economy was doing from an employment standpoint to, really to see whether it solidifies a guarantee of a rate drop that after this comes out at 10 a.m. on the 17th, we will more than likely be, it'll be a 0.25 point drop. But inflationary data just came out this morning for August, our CPI numbers. And our year over year August numbers were at 1.9%, up from 1.7 in July. We were down 0.1%. This is lower than the expectation, which is a good thing. We're below that kind of 2% threshold. And, all with that kind of signs are pointing towards the drop from the Bank of Canada. We're within that target range of 1 to 3%. However, obviously, the core inflationary data is a little bit higher, driven mostly by food prices, shelter, and gas, of course. But we have been declining month over month, which is nice to see. Core inflation is at 2.4%, which is, again, year over year in August, slightly below recent months. Again, all signs pointing towards that rate reduction. We've got really all the major banks kind of pegging that there would be a rate reduction. Obviously, this is coming out after that, and why we're expecting that in combination with the unemployment numbers, like we've talked about before, of the escalating default rates and things like that with regards to not only business debt, but consumer debt. So the 0.25 point drop will be welcome news for a lot of people. This is putting bank prime at 4.7%. So for those of you that are on variable rate or adjustable rate mortgages, I should say, you will see a rate and payment reduction as of October 1st. It'll kick in typically the first of the month preceding that rate reduction. So you'll see that drop. For those of you with lenders that have a static variable payment, you will not see a change in your payment. However, you will see that more is going to principal and less to interest, which is obviously nice to always see.
Yeah, I had 2 conversations yesterday with people that are up for renewal, and both of them were kind of, they're up for renewal in October, so very soon, and wondering, like, kind of that, the age old, like, do we go fixed or variable? And right now, we're kind of at a threshold where they're, with this assumed rate cut, they're going to pretty much be at par. Like, I was talking to these clients yesterday, based on their profile, they would qualify for a rate of prime minus 0.65, which would, as of yesterday, put them at 4.3. But assuming we get a rate cut and, that discount isn't reduced, it puts them at 4.05. versus like a 5-year fix, which is kind of at that, let's say 3.99 just to be fair. So almost on par again, which we haven't seen that in a few years. I don't think it's kind of been a very weird dynamic where the variable has kind of been following the fixed, and in most cases over the last 5 years, it's actually been higher. There's been a few instances where it's been lower, but in most cases, it's been higher. Now, right now, as of yesterday, when I was looking at the 5-year government bond, I'm looking at it right now. It's currently at 2.673. So it has come down a lot. It was almost at 3.25 in July. So I mean, it's dropped pretty dramatically. And I would assume with the Bank of Canada, with the overnight rate dropping, we'll probably see that slide a bit further. I mean, we might even see it at 2.5 in the next couple of weeks, which would inevitably drive those fixed rates even further down. So who knows? If you're renewing in November, December, I mean, you might be looking at something in the high three, at 3.79, 3.89. I mean, lenders are usually not the quickest to respond to those rate drops. But there are a lot of, you know, it's a good time to be renewing versus, like we said, a year ago. And for anyone buying, again, lenders have the option to, or they have the ability, excuse me, to do what we call float down. So if you lock in that 3.99 today, if the rates do come down in October, November, et cetera, like still be able to get that lowest rate. So I think it's a good time from a rate perspective. But again, we've talked about this, and sorry if you listened to the last two episodes, but when those mortgage rates are dropping, it obviously means that from a larger economic scale, it's not great. But from just a strictly mortgage perspective, rate perspective, they are trending in a positive direction from a rate drop standpoint.
Mhm. I agree. Looking at the 1 month bond data, over the last 30 days has been, we've gone from almost at 3% on the yield curve to now being at 2.67. That's a significant drop. We haven't seen the banks drop their rates as much over that, basically 33 basis points. We haven't seen that drop over the last few weeks or even month. They've kind of ticked up. Bonds have come down. Like you just said, they don't adjust too quickly to the bond market dropping. They kind of pat in that they hedge themselves as far as risk is concerned. But to your point, I would expect this week to start seeing more rate drops. We did see a couple of mortgage focused banks or monoline lenders drop 10 basis points this week, which was nice to see on their fixed rates. They are still elevated, higher than what I believe they should be. So I think with the rate reduction by the Bank of Canada on the 17th, I guess today when this comes out, that we'll see further reduction in the bond market. And I think we'll see those fixed rates come down further, and we'll start to see that the 3 in front of the 3 and 5-year fixed rates start to show more or be more prevalent, and kind of weigh those options for people of you start seeing that 3 in front of the figure for the fixed. It is a little more attractive, obviously, to kind of lock in at that.
Yeah.
And the conversation becomes a little bit more difficult between variable and fixed. However, to your point, what you just mentioned, being at prime minus 0.65, or even some others being better than that, you're in that 4% range. And all indications are from a lot of the major institutions, BMO and Scotia especially, came out and their chief economists changed tunes that not only were they expecting this rate reduction on the 17th, but likely 2 reductions by the end of the year, which would mean, another quarter point drop. And so if that's the case, now you're into the, certainly into the 3s on your variable. But again, there's that risk, and people have that, remembering over the last 2 years of kind of that escalation of bank prime, and certainly getting scared away from variable in that regard. So it is, I would say, have that conversation with your mortgage expert about the differences between variable and fixed, what might make sense for you while we have this downward pressure on rates.
Yeah, and I mean, we kind of have the benefit of having a multitude of different lenders in the sense that we really see kind of the full range of what's out there. And I mean, there are some lenders in that 3.99 range for fixed, while other lenders for the exact same product are at 4.59. Like, it's such a wide range right now that I think lenders all have their own strategies as to how they want to pack in those margins as rates come down, and at what point do they drop rates? How much do they have to lock in as far as mortgages to be able to kind of reduce those profits or that spread. But it's very interesting to see, and I think, as you said, I think we'll see over the next few weeks, like lenders will kind of all follow suit and continue to drop their rates. Stats are out, David, for August. It's
Stat me, stat
interesting.
guy.
Okay, so here we go, August. So I'll start with kind of the headline stats. So new listings, 2,121, and that is down from 2,549 in July. So a 400 new listing drop. Benchmark price for a single family home, 700,100. So basically 700,000 on the nose. That's also down from 705,000 in July. So a slight decrease. Days on market is up. So 28 days on market right now versus 24 in July. Active listings, 3,971, down from 4,205. Benchmark for apartments, 412,300. So that's slightly up from 412 last month. And then sold properties in August, properties sold 1,236, and that's slightly down from 1,312 in July. So the new listings, year over year, slightly up for August. In 2024, there were 1,953. This year, 2,121. Sales activity slightly up from 2024, 1,236, as I mentioned this year, 1,103 last year. And months of inventory is exactly the same, 3.2 months. So August, looking over the last few years, other than 2020 and 2021, 2022, 2023, 2024, 2025, all basically within 2.6 to 3 months of inventory. So it seems like August is the most balanced of all the months, as far as what's available. The days on market, I mean, pretty much the same, 24 to 28, not much variance there. Even going from 704 to 700, to me, it doesn't really, it's pretty much the same, like slight decrease, I guess, but nothing in there is really surprising, honestly. Like nothing is standing out where it's like, wow, I can't believe X, like they all seem pretty much what you would expect. New listings slightly up from last year. Again, not surprising. I mean, we kind of expect to see a few more people listing recently, but anything in there that stands out to you, David, or anything that kind of caught your eye that was surprising?
No, nothing that really catches my eye. I mean, August has been slow. We've seen it. We've felt it. Again, we've talked about it before, but August is kind of that prototypical July and August, but August especially. Kids are out of school. Families are taking their vacation in August. They're not wanting, if they didn't find something in June or July or May, June, July, they're not getting into that new home, new school district, or new home before school starts. And nobody wants to be unpacking or packing as kids are starting at a new school. So that's kind of, the typical cyclical market, in most areas that August is, very slow. So I'm not surprised with listings being down and the days on markets being up. I mean, the August to August I'm surprised it's ticked up a little bit, but I mean, that's just kind of where we're at, where we have a lot more listings and things like that. But, again, at 3.2, I think you said 3.2 months, that's pretty well a balanced market. So nothing's really changed there. I think what'll be interesting is just whether this rate reduction by the Bank of Canada, moves the needle at all. Have people having rates in the threes on a more consistent basis, if that's going to foster, the market picking up and people coming off the sidelines a little bit. But yeah, I guess obviously time will tell. We always thought from the get-go when Bank of Canada started dropping that there would be more of a quote unquote flood to the market, not necessarily flood, but people coming back to the market. And we haven't seen any sort of drastic uptick in that. What we've seen is listings come up, and that's more so a byproduct of so many people up for mortgage renewal. A lot of those rentals up, so people are just not wanting to. They're rolling into opens, or as they're coming up for maturity on their mortgage, they're wanting to sell around that to minimize their penalties. So I think that's where a lot of that product is. But certainly, we're going to start seeing. I think we're going to start seeing that those listings shrink over the coming months, especially as we get rates into the threes, supply starting to be bought up. There's obviously no, resale condos being built and not many homes being built right now because of where costs are at, tariffs are at, and the market is at. Builders aren't wanting to build much condos. It's all rental. product, like we talked about a few weeks ago. That that's the predominant portion. I think it was like 70% of new home starts was rental product in Canada. So as that kind of dries up, those new builds, I think we're going to have to see that inventory start being absorbed a little bit more and possibly ticking under that 3%. Again, that's barring that rate reduction and possibly that slower uptick, especially if there's another reduction prior to the end of the month or end of the year rather.
Yeah, one stat that I wish they included in the year over year was year over year benchmark price. Like they have kind of all the other stats comparatively from, new listing sales activity, months of inventory, but not the actual benchmark price. So I'd be interested to see where that benchmark price was in August. I feel like to me that's the most telling as far as like where the market is trending and where it's heading. But month over month, yeah, slightly down.
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most. Are you trying to grow your mortgage business? CENTUM has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with CENTUM. Learn more at joincentum.ca. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocat Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal.
The other thing I wanted to touch on, Dave, which is kind of the big headline for this week, was the Build Canada Homes. So I can just kind of summarize or at least read the headline here. Build Canada Home aims to build 4,000 housing units on federal land. So this was announced by Mark Carney, part of a $13 billion agency budget to speed up affordable home building. So I know you had some notes on that. I don't know if you want to run through what you found.
Yeah, I mean, obviously it's focused on affordable housing. The main cities that it's been earmarked for being
Dartmouth, Longueuil, Ottawa, Toronto, Winnipeg, and Edmonton. Those are kind of the 6 federally owned sites that they're focusing on to start.
Yeah, but the interesting part of it is it's 4,000 factory built homes that they're focusing on. So modular homes. For $13 billion. So this actually works out to $3.25 million per unit or per home based on a 4,000 target home.
Yeah.
I think that's absurd to begin with. Just as simple math is concerned, why it's costing $3.25 million per home is kind of crazy, but they have capacity up to 45,000 units nationally based on the 6 public sites allocated or identified in those areas that you mentioned. There's going to be a $1.5 billion rental protection fund to help preserve and make affordable existing at-risk rental apartments, $1 billion for transitional and supportive housing, and a partnership in places like Nunavut with some units there, 700 plus units, and a portion of them being factory built. Really in that factory built component, it is really interesting to see that is the way that they're going. Obviously the methodology around that, I'm sure, is to build cheaper, more affordable housing. However, with how much they have allocated to this, I am skeptical that this is more affordable for the build cost, at $3.25 per unit. But I guess, hopefully they can push that higher than that. But it does also kind of play into, and we mentioned it, we talked about it off air, but it is going to have an impact on trades as well. If they're factory built and going through, that's also not helping the trades, so much in that means in that area rather, for these homes being built in a factory does not, really generate high skilled jobs. It will help with predictability and kind of that supply chain management and be able to procure, Canadian materials. However, again, like how is that going to impact the labor market in some of these areas, which I think is to be seen. But yeah, I mean, it's the person running it is the former Toronto deputy mayor, has been appointed as CEO, and she has a track record in housing policy, public-private partnerships, and it's going to become a standalone entity apparently over time.
So yeah, the article I was reading was suggesting that the reason they did it this way was actually to prioritize cost efficiency and modern construction methods. So kind of that factory built modular mass timber type thing. But as you said, like if we're losing jobs, like I think last month there was 110,000 jobs lost or 100,000 jobs lost. Like you'd think that this is a huge opportunity to create jobs within Canada, right? Like create those trade jobs. Now, the main people that are going to benefit from this is obviously the federal government because they're using federal government land, and also, this is our tax dollars are going towards this project. Modular and prefab manufacturers are also going to benefit from this, especially those who can scale. So, like having existing factory capacity or that can be kind of ramped up fast. So, contracts for mass timber, prefab modules, like those companies are geared for large volume. Not to name names, but there are a few that are already kind of talked about that are obviously going to largely benefit from this. And then manufacturers of mass timber, modular panels, insulation. So hopefully Canadian companies, their employees are going to benefit from this. But the trades is really what is going to hurt the most. And to me, that's what's most frustrating. Like the framing, the plumbing, the electrical, like all those trades that are really kind of taking the brunt of these job cuts. Local trades, especially in these major cities, are not going to be seeing any of the work associated with this $13 billion budget. And as you said, like if it's going to cost $3 million per unit, I mean, to me, that like 4,000 homes seems like a very small number. One of the MPs yesterday was talking in front of one of the sites, I think, where they were building these prefab homes, and they were like 200 square foot, like coach houses, basically. And my understanding is these are purpose built rentals, correct?
Yeah,
Like they're not going to be selling these. So these are rentals for
correct.
Canadians. Yeah, it's tough. It's hard to think this is going to be long-term great for Canada from a job and from just like a living standard standpoint.
Mm-hmm.
But I think generally speaking, the fact that they have a plan is good. I think the fact that they're allocating all of this money without yet tabling a budget for the year, which I think has also been pushed now another month or two, within Parliament is also kind of frustrating because it'd be nice to just see like, okay, what is the plan here? What is the new deficit?
Mm-hmm.
Where is all the money going that we're allocating for this? Where is it coming from? What's going to have to increase in our budgets to cover all the costs of these new projects that are being created? That's kind of where my head's at. Like, I just want to see the checks and balances. Like, where is this money planned to come from, and where is all the money going that is not yet tabled but is still being allocated? You know?
Yeah, I think to your point of the size of homes, these modular homes, they're likely to be on the smaller scale. They're rentals. Again, we just talked about the rental market being the predominant portion of units being built right now. Like the housing starts is something like 70% are rentals or higher.
Mm-hmm.
I think it was even higher than that. So how does this help affordability for purchasing? If they're not selling these off, and really they wouldn't be able to sell them off at even a break even, because based on that 3.25 million per unit, they're obviously not able to recoup any of that money, especially if they're modular and kind of smaller square footage. So you're looking at affordable, but forcing people into really tiny homes.
Yeah.
How is that a benefit to the average Canadian or young Canadian that is looking to, kind of forward looking, entering university or entering college or entering the workforce at their, early 20s, and thinking, how am I going to save up and be able to afford a home when the average home price is $701,000 in Ottawa, like you just mentioned. And they're looking at, okay, well, the government's got this Build Canada Homes plan, but they're going to be building affordable rentals. That doesn't help the younger generation or any generation be able to buy a unit more affordably. It's just increasing rental supply. The per square footage is also, we're talking 3.25 million per unit. When you break it down per square footage based on like how big are these units going to be. So I think there's a lot of I think it's a lot of like headline grabbing that this money is going to be allocated to this. I don't know what that execution is going to look like. How long it's going to roll out and whether it's going to actually have any sort of impact at all. But forcing people into, tiny homes of 200 square feet. I mean, we're seeing it in Toronto. People complain nobody wants to live in a shoebox, and those shoeboxes are 500 and 600 square feet, let alone like we're talking modular tiny homes is a whole other story. So I think, obviously more plans need to be rolled out and more insight as to what this looks like. But at a high level, when you break out the numbers, it just doesn't make sense by any means. So again, time will tell, but I think it's, to me, it's more headline grabbing than actual like executable and affordable plan.
Yeah. And also, I mean, this is, like you said, like we're using kind of public tax dollars towards creating affordable housing, which I think, like, I know after the war, there was like CMHC kind of founded, like there was homes built to help veterans and returning soldiers and stuff for affordable living and things like that. But as far as I know, like, I don't believe it's common to allocate funds in that manner, right? Like to use it for affordable housing. And I think that, like, to me, if it was going towards like creating jobs for Canadians and bettering the economy as a whole, but I think long term, like you said, like in 15, 20 years, what is the quality of these homes going to be, right? Like if we're not building them with
Mm-hmm.
like long-term provable materials, and I don't know this, I don't know the answer to this question. Maybe people in the comments know more about these prefab homes and the quality of them, but in 20 years, are they going to still be standing, or are we going to be
Mm-hmm.
reallocating funds to maintaining these and like keeping them up to date? Like what is the long-term plan with these, right? Like it's like you said, it sounds great short term. We're going to create, affordable rental homes, but at what cost? Not only just financially, but like at what cost long term is this to our overall like overlying economy, our citizens, et cetera? That's, to me, is like the most outlying thing here, and the thing that I guess is the most frustrating is that they haven't really, and maybe they will clarify that in the coming weeks, but they plan to start this, as far as I know, within a few months. Like in the next year,
Yeah.
I think they plan to have some of these off the ground. So tell us, like, what is the plan here? What's the plan long term? What's this going to look like in 10, 20, 25 years?
Yeah. I think it's kind of ironic that the emphasis is on using public lands, factory built and modular homes, sustainable construction materials, with the goal to speed up build times and reduce costs.
Yeah.
Uh, I don't know how this reduces costs from what they've allocated in their budget to what to number of units, but I guess maybe in that budget is kind of the cost to buy this land back from themselves, from the federal government. I don't know, but it just seems like a crazy figure. Like I can't wrap my head around. I can't look past that $3.25 million per unit. And maybe somebody in the comments can correct us on this and educate us on this because as to how and why the costs are being allocated so high per unit or where that's being derived from. But that is certainly something that is of really a standout to me. I mean, even beyond this, like they're allocating $1 billion for, in addition to that, for transitional housing for homelessness. So that's not even like in this 13 is not part of that is not isn't even including homeless supportive housing for homeless and transitional housing, and then there's an additional 1.5 for existing rental apartments to ensure that and preserve their affordability. So those are all in addition to. So again, I'm very curious to see this whole plan roll out and get more details on it. It would be nice, like you mentioned and alluded to, it would be nice to see the full budget framework for the upcoming administration, what they're planning on rolling out, and not just being like this one like headline grabber. Like, what's the broader context? What's the broader plan for housing? And hopefully that comes out sooner than in the next couple of months, because it's already been delayed since before the summer. So I guess time will tell. We we'll keep relaying on the news as we get it and on here, but certainly if anyone else has any insight or able to clarify some of this $3.25 per unit would be fantastic.
Well, like Tom Cruise says in Jerry Maguire, show me the budget. Show me the budget. So we're sliding into the mood
Show me the mood
David?
boost. Show me the mood boost.
A lot of doom and gloom here to end the show. Hey, okay. I got 3 today. Number 1, what do you get when you cross a snake with a pie? A python.
Yeah.
Python.
Makes sense. Makes
Yep.
sense.
Number 2, if you ever get cold, just stand in the corner for a bit. They're usually around 90 degrees.
I like that.
And what did the horse say when he fell? Help! I've fallen and I can't giddy up.
Wow. I like the second one.
I wanted to give a quick acknowledgement, quick shout out to our listeners, especially on YouTube. We had 2,000 subscribers this week. That was kind of our goal for 2025. We're only September. We've hit our goal, so thank you to everyone for tuning in, and thank you for everyone in the comments who contributes, and for our community just for supporting us. And thank you to our amazing sponsors again: Gertain Poirier, Avocat Lawyers, Big Insurance in Westboro, and CENTUM. We really appreciate your support as well. We're here every Wednesday, 10 a.m. Be sure to follow us on our socials, and we'll see you soon. David, have a great week.
Deuces.
Bye, everyone.